Hello everyone and welcome to my morning report chart analysis videos with me, Richard Market Analyst at Hantec Markets on Friday the 9th of November. We've had the FOMC meeting yesterday. Didn't really do a great deal in terms of changing the statement. There was a slight nod towards the fact that unemployment was falling. And probably the interesting thing was what it didn't include, and it didn't really talk anything about the volatility that markets had seen through October. And that pretty much sort of sets the market up for the December rate hike. There's very little reason now, I think, why we could see the December rate hike not happen. So subsequently, what we've seen is the dollar, which has strengthened. Treasury yields relatively stable, actually. And it's interesting that this morning we've seen the 10-year yield coming back a bit, but the 2-year yield sort of continued to push higher. The yield curve flattening, whereby you see the 2-10 spreads, the purple line here, and the 5-30s actually just falling away, continuing to fall away actually over the past week. And the dollar rebounded yesterday into the close, nice strong move, and again today, because what we've seen is the dollar outperforming across the majors, with one exception, and that being the yen, which seems to suggest that there is a risk negative outlook on markets today. And that is reflected in the fact that equities are across the board lower on European markets. You saw the S&P 500 falling into the close. You've got futures which are lower by 0.4% today as well. And it all sort of paints a picture of fairly negative risk sentiment today. You haven't really seen any notable move on the VIX volatility yet, but that would be worth watching if that again starts to pick up. But certainly if we see the continuation of Wall Street sort of correcting back, then you could quite easily see those volatility factors starting to rise again. In another factor being the oil price, which on WTI at least has now turned into a bear market. That's down over 20% from that high of 76.90 back in early October. We've seen the oil price falling into a bear market territory, below 20% on the WTI. Not quite as big a fall on crude, about 18-19% there, but the continued decline that we've got today on oil seems to be a 10th day lower in a row, potentially on that WTI. That's pretty negative in that sentiment as well. So what do we look forward to today on data front? Well, we've had let me just show you, you've had the UK numbers coming out just now, and what we've had is in line on the growth numbers for Q3, 0.6% and 1.5% on the year-on-year data there. So that's no real impact on sterling on the back of that. Sterling is actually underperforming already today because, lo and behold, the Brexit remains a key driver there, and what we've seen is the Northern Irish DUP party, which is sort of pouring a little bit of cold water on the prospect of a deal that Theresa may be able to get through the EU. Doesn't look as though the DUP would sign up to that, so it struggled to get through UK Parliament. Subsequently, we see sterling falling. We're also looking out for the Michigan sentiment this afternoon. Prelim reading of Michigan sentiment 98.0. That's down from the last reading of 98.6. So again, watch out for that this afternoon at 3 o'clock. My chart of the day is sterling yen. Now, obviously, that is a sterling chart, so it would have been impacted negatively this morning by not only the sterling falling, but yet the yen strengthening. So what we have seen is this rally on sterling yen in the last couple of weeks starting to turn negative again. We've seen a doji candle yesterday that came at the resistance of 149.70. So under that resistance, that is a key level. If I actually go back, you could see that if it broke out above 149.70, then that is a key upside break. That's a big base pattern. However, it doesn't look as though the market is going to be doing that on this leg anyway, because what we have seen is the market shying away from that level, forming a doji candle, Strong bear candle following on from not only a doji but a strong bull candle. That is an evening star pattern, 3 candlestick setup pattern there, and is a negative reversal pattern. So you get the sense that this market could now be turning corrective. You've got the RSI back below 60. Stochastics seem to be crossing lower as well. So it looks like the market could be going into reverse in this move. Now, what we have also seen, hourly momentum indicators having been previously strong throughout November. The hourly RSI is now below 30, or moved below 30 just recently. The hourly MACD lines moving below neutral. Again, all sort of points towards a more corrective setup, and something that now could well be a move that starts to sell into strength. So watch out for the fact that we've got an overhead supply area around 148.60. So if the market fails around that and turns lower again, it could sort of start to increase the downside pressure. 147.30 is the initial support, and then you're looking at 146.50. But it certainly looks as though momentum and a sell-off could be growing. So with that in mind, I wish you good luck in your trading today, and I'll speak to you later.